What's up, YouTubers? I hope everyone is doing well. Happy New Year. I've been wanting to do this video for quite some time, but I think now is actually a great time because prices have fallen quite a bit. First off, this video is dedicated to a good friend of mine who went along with a lot of my stock picks, and unfortunately he passed away over a year ago. I'm just very grateful that I was able to help him as much as I could while he was alive. Without further ado, let's get started with the video. This year, I'm stepping out of my comfort zone and have been looking into different industries. My number 3 pick for 2022 is Coty, stock ticker COTY. One of the leading brands in the industry is L'Oreal. The CEO of Coty worked for L'Oreal for 20 years, eventually becoming president of L'Oreal for 4 years and 4 years at Lancôme, which is a division of L'Oreal. There has been a shift in the market for cleaner, more sustainability, environmentally friendly products that we consume. And Coty is making that push by updating their product lineup, such as Kylie Cosmetics, assuring each product is vegan, cruelty-free, with clean formulas. Coty owns a wide range of popular cosmetic and fragrance brands, such as Gucci, Calvin Klein, Lancaster, and a 50% stake in Kylie Cosmetics. Coty is not profitable at the moment, so it can be volatile if they miss on earnings or if guidance doesn't fall in line with expectations. My second pick is Goodyear Tires, stock ticker GT. When it comes to US vehicle sales, there's roughly 15 million brand new vehicles sold in 2021. Used vehicles are selling very well also. Instead of chasing who's going to be the best selling vehicle, I'm going after what they all share in common. They all need tires. Besides the Goodyear brand, they also own brands such as Cooper Tires, Dunlop, and Kelly Tires. They make all types of tires from aviation to heavy-duty off-road tires. During their last third quarter earnings, they reported net income of $132 million. Pre-pandemic levels in 2019, they reported $88 million. That's a 66% increase from pre-pandemic levels. My number 1 pick for 2022 is Nvidia, stock ticker NVDA. When I mention this, people always want to say, "Oh, it's Cramer, it's Cramer." I've been invested in Nvidia since it was $14 a share, when they were just the number 1 company when it comes to visual graphics cards, and they still are. You might have heard they are involved in self-driving cars, AI, data centers, and the metaverse. But what I really want to talk about is their acquisition of ARM. ARM is the architecture for chips when it comes to products such as your smartphone, gaming device, your personal computer. There's so many components inside these devices. In order for these components to communicate with one another, there needs to be an instruction set architecture, or ISA, pretty much a platform. There's a couple of ISAs out there. China has their own ISA, but the main two are ARM and Intel's x86. 90% of all smartphones are based on the ARM architecture. Apple's M1 chip, the 3 main gaming consoles, AMD CPUs and GPUs, even Enphase's iQ8. I think it's not being talked about enough because as an average consumer, it doesn't pertain to us. We don't necessarily see it. This is more geared for developers and engineers. Now, the acquisition isn't finalized yet, and there's still a possibility that it's not going to fall through, as other companies and regulators are trying to block the acquisition. It is an expensive stock. Not too long ago, it was above $300. I do believe under $275 is a good entry point. This is a growth stock, and I have seen this get cut in half before. Just a little recap from last year's picks. It was kind of flat. GDX was more of a safety play, and Enphase hit a high of 282, not far from my price target. I sold out of GDX Wednesday for a small gain. I still haven't sold my Enphase shares or TSM. I have been buying more of Enphase. I've increased my position by 50% and own 450 shares in my main account. It's been brutal. Enphase has been cut in half twice in a year. There's a lot of talk about tech stocks being hammered because of rising interest rates. As I mentioned in my last video, Enphase issued over $1 billion in notes at 0% interest rates. Half of it not due till 2026 and the other half not due till 2028. So they already borrowed the money. Something to note when it comes to clean energy companies, a lot of them are not profitable. Enphase is part of the S&P 500, so do some due diligence and look into the criteria of what makes a company part of the S&P 500. As always, guys, if you find value in this video, please like and share. All my picks are my opinions only and for entertainment purposes only. And I'll see you in the next one.